Good day, everyone. We are the Group Palaban from BA41 Basic Microeconomics.
Today, we will present 4 key microeconomics concepts: utility, cost, production, and factors of production.
We will explain this concept in a simple example from everyday life.
Of this video, you will understand how these ideas affect business decisions.
Let's begin with the utility. Utility is the satisfaction or happiness we get from consuming a product. For example, when you eat your favorite pizza, the first slice is very satisfying. The second slice is still good, but slightly less enjoyable. But the third or fourth slice, satisfaction decreases. This is called diminishing marginal utility, meaning each additional unit consumed provides less satisfaction than the previous one.
Next is cost. In business, there are 2 types of explicit and implicit. So, explicit costs are cash payments, such as rent, electricity, raw materials, and salaries. Implicit costs are non-cash costs. This includes the owner time, skills, or effort that could have been used elsewhere. If the owner spent 8 hours running the shop, that time has value even if they do not get paid extra.
Fixed costs are expenses that do not change even if the business produces more or fewer products. Key ideas. These costs stay the same no matter the output. Examples: rent, salaries of permanent employees, insurance, equipment, property taxes.
Variable costs are expenses that change depending on how many goods or services the business produces. The more you produce, the higher the variable cost. Example, raw materials like flour, meat, milk tea, ingredients, packaging, electricity that increases with production, wage for part-time workers, if paid per hours at home. Summary: fixed costs do not change with production. Ang variable costs change based on production level.
Production is the process of turning raw materials into finished goods. As more workers are added, production increases. However, after a certain point, adding more workers can slow production. This is called diminishing returns. Profit is calculated as profit. Total revenue, total cost. Business aims to maximize profit by increasing revenue and reducing unnecessary costs.
Finally, the factors of production are the resources used to produce goods and services. Land refers to space and natural resources. Labor is the workforce. Capital includes machine, tools, and equipment. Entrepreneurship is the person who organizes and manages all resources. 4 factors must work together for a business to operate efficiently.
Utility customers enjoy milk tea, but each additional cup gives slightly less satisfaction.
Cost. Rent, ingredients, and salaries are explicit costs. The owner's time is an explicit cost.
Factor of production: land for shop, labor for the staff, capital like machine, and the owner as the entrepreneur. As a group, we learned that utility explains the satisfaction consumers get from products and that this satisfaction decreases with each additional unit.
We also understood that business pays 2 kinds of costs: explicit cash expenses and implicit non-cash sacrifices. We learned how production works, including how adding more workers affect output and profit.
Finally, we realized that every business depends on the 4 factors of production: land, labor, capital, and entrepreneurship.
This concept helps explain how businesses make decisions and operate efficiently.
Thank you for watching! Bye!